Welcome to my weekly review. Today is a day that will live in infamy, December 7th. And Pearl Harbor attack was 82 years ago? And we still remember it on this day. Anyway, you're looking at a daily chart of the Nasdaq. I know this is a weekly review, and this is a daily chart of the Nasdaq. I just wanted to show Friday's action. So I haven't made a video from Friday. It was up 159 points or 0.81%, and with 5% above the 50-day average volume. But I wanted to point out that now the Nasdaq is 6.2% above the 50, and usually when it gets, I don't know, above 6, it starts to get a little wonky. I would expect it, it could go to 7, 8, or even 9 or 10% above the 50, but eventually it'll come back down as it always does. It'll pull back to the 50 at some point, but we're going to ride this rally until, well, at the end of this video, I'm going to show, my expectations based on, history. Anyway, I've got to get to the weekly chart because this is a weekly review, and the Nasdaq was up 641 points or 3.34% with 10% above the average weekly volume. I just wanted to point out that, yeah, we're in a strong uptrend. We're in a rally, but if your stocks were up, 6% last week, that's kind of normal. Your growth stock should be doing 2% of the index, with the index up 3.34%. Your growth stocks, a lot of them that I had on my ready list were up 10, 12, even 16, 20%. So it was a good week on the Nasdaq, and you could see that that's a nice little candle there on the weekly. Anyway, I've got to get to the SPY. You know what? I'm going to go to the S&P 500 instead of the exchange traded fund. And this is the weekly chart, nearly 58 point move last week. 0.96% with above 9% above the average volume there. You could see it traded above 6,000 earlier, then recoiled a little bit here, back to the 21, and now is back in this uptrend and closing above that 6,000 level. No problem, right? There's your the election bounce there on the 5th, the 6th, yeah. And then since then, we've been in a nice uptrend. All right. And then the Dow Jones Industrial Average, that 6,000 was a big hurdle for the S&P 500. Another big hurdle for the Dow Jones is this $45,000 point level. And you can see it's bumping its head up against 45 in just a matter of time before it blasts through there. And then the Russell, which was, kind of lagging last week. Oops, it's a weekly review. I got to show the weeklies here. Yeah, pulled back a little bit last week, 25 points or 1.06%, as the small caps did not participate, but that could change, as you see on the daily chart here. And I've got the 5 EMA. This is a pullback to the 10. If I just if you'll indulge me here, I'll switch back to the 10. I'm using the 5 because of the market that we're in. So there's your pullback to the 10. And yeah, that's a nice little wedge pattern that we've seen in a lot of stocks recently. And anyway, that's enough for the indexes. I'm going to get on with the Magnificent Seven. Apple breaking out. That can't be bearish with Apple breaking out above that 237 buy area. Microsoft performing much better, broke above its downtrend line here and last week. So yeah, I like Microsoft right here above the old 441. Thank you very much. We'll take that. Meta had that one on the ready list last week. Getting a little extended for me here, but yeah. Yeah, just a little too extended. I'm gonna take that one off. But congrats if you got that one. Meta performing really well. Just blasted through that 600 level as it broke above its downtrend line. It was consolidating, trading tight within a base below the 50, and then just, exploded higher. So congrats to the Meta platform longs. Same with Amazon. Congrats to your longs here. You can see this 201 buy area, and it just, did the fake break. I shouldn't call it fake breakout, just a failed breakout, return to the pivot, which a lot of stocks are going to do which coincided with its 21. Then it found support at the 21, just ripped higher. So congrats to the Amazon longs. Google, not so much. This one's struggling. This is probably the worst performing of the Mag 7s, just still consolidating within a base, but keep your eye on it. It has the ability to move. And then Tesla, probably the best performing, or it is the best performing of the Magnificent Seven. It's a weekly review. I got to check the weekly chart. I just believe that Tesla's going to take out this old high of 414.50. You know, it's at 389 now, so. I don't think that's much of a stretch to say it's going to take out that old high of 414.50. If you own Tesla, congrats to the longs there. That's had a heck of a move since the election day, which looks like it's probably right about here. When, yeah, there's a, well, the 6th is the day after. Yeah, okay. All right. Anyway, I mean, more on that later. Keep that thought. And then the last one is NVIDIA, which everyone is expecting to break out, but it just won't. So stop looking at it, stop expecting it, and maybe it'll do something. But it's just kind of wallowing here. It was up last week. It had a nice week. It was up to 3% there. So that's not a bad week, but you can see this consolidation pattern, the pullback here, and it's just struggling to move higher. I mean, it's a 3.5 billion market cap. So anyway, it'll take a lot to move that a big distance. All right, I've got to go. The big theme last week for me anyway was a software group, and it was the Salesforce earnings report that just set the software world on fire. It just, gave the okay for investors to make the AI trade, as Benioff was talking about. The success of AI, and all these big companies, these S&P and companies use CRM, in their businesses. And if Benioff's saying, it's all systems go, well, that gives investors the signal, it's time to buy. And a lot of these smaller names took off. I'm going to get to that in a minute, but I'm going to go through some other quickly. I'm going to go through some other earnings reports last week. This is Zscaler. Like this chart pattern, they reported last week, had big volume, not a lot of movement. It pulled back the day after it reported, and then started trending higher. So I like this trend here. Following their earnings report, 40% EPS growth is nothing to sneeze at. CRDO, they reported, had a nice move, right? Gap higher, not to be ignored, Dan. 47% move. Thank you very much. And making new highs on Friday as well. So CRDO looks fantastic. Pure Storage, Charlie Giancarlo's company, nice report. They announced some deals and looks pretty good. Had an inside day on Thursday, an inside day on Friday. So that bodes well, just allowing the moving averages to catch up for Pure Storage. OKTA, their report, wasn't that great. We don't care. We just care about the reaction. One thing I don't like about this is it made a low, it took out the low of 82.79 on the gap day, traded 82.69 on Friday. Ooh, that 10 cents makes a difference. So we'll see about OKTA, not a stock that I'm really interested in. Rubrik reported Thursday. And then Friday had a nice day. I didn't like the close on this. Gapped higher, ran higher, and then sold off into the close on Friday. Still, I mean, a nice 20% move. I mean, congrats to the longs. This is the newer merchandise that, I think that investors are interested in as well as ALAB and Reddit and, GEV. There's quite a few class of 2024 that are doing well. But this is a nice breakout. Here's your consolidation, maybe your little due diligence, and now maybe it'll start its advanced phase. What do you think? Yeah, I think so. It certainly looks that way. And you like that earnings line heading due north. So I was listening to the CEO, and he's very positive on, of course, they're all positive on their outlooks. Well, not always, but he was very ebullient about his business. All right, GitLab, they reported very disappointing. You can see this is set up with the cup with handle pattern. Thought this one might break out, but no cigar, no soup for you. And still up 5.5% on the week, but I want to see a little better move than that on Friday following its earnings. You can see the gap higher and then selling off. Yeah, like I said, no soup for you on that one. ULTA, oh, nice report for ULTA. When I see reports like this, I look for pin action in stocks like ELF, which also did well. This is a 9% move for ULTA, and it's a weekly review, so I'll show a 5-minute chart. Here's the gap higher, sell off into the close, similar to ELF on Friday, gapped up and sold off, and then, some buyers into the close. ELF had a nice day. So that's what I look for in pin action. If you don't, want to buy the stock that's actually reporting and moving, you can do some derivative plays off of that new data point. LULU, same thing. They reported a nice quarter. And had a nice response. I mean, 16% move for Lululemon, so good for them. DocuSign, another company that ramped hard, man, just blew through that 100. So hopefully, it keeps the 100 doesn't become a resistance problem, and it just keeps going higher, like poop through a goose right there, baby. Gotta like that one. Asana, Dustin Moskovitz bought every share of his company, and went up 43% on Friday after their earnings report. Finally got 50% earnings growth and the same 10% sales growth, but good move. And then of course we don't like bears on Wall Street, but Build-A-Bear will accept. It had a earnings move on Thursday of 22% and just had an inside day. It was down 11%, but that was an inside day on Friday. All right, that's enough for the earnings. I've talked about Salesforce software, and it had a ripple effect. Yeah, a ripple effect with the software names, including AppLovin, which has just gone parabolic. This thing was a $90 stock. I believe we put this on our, I know we put this on our leading stock list in August when it was $90, and now it's 400, right around here. Yeah. August is back here, yeah, $90, and it's run to 400, but I mean, not too long ago, it was a $10 stock, so I think the morale is probably pretty good at that company right now. But you can see the earnings line heading due north, and the stock is heading due north. I'm not one to call a top or, I don't see any sell signs here. I know it's getting way extended, but as long as we see these blue, you know, towers of volume here. I mean, these are institutional footprints, institutions. Just last week, it was up 19%, with heavy, heavy volume, 27% above the average volume. So, oh, yeah. And after the close, it didn't get into the S&P. So somebody threw a hissy fit. This thing was down to 370. I had to pick some up. I'm just a degenerate that way. I was watching this go down. I'm going like, what the heck? This thing's down to 370. We hadn't seen those prices since Thursday, right? When it, so anyway, I mean, an inclusion into an index is not a reason to buy or sell a stock. And an exclusion from getting into an index is no reason. It was down, yeah, on 12.5 on Thursday, it was at 370. So I thought, maybe I got to switch this back to the 5, if you will indulge me here for 1 minute, because this is where the leading stocks are finding support at the 5. You can see AppLovin finding it there. So if it pulled back to the 5, after hours with some people panic selling, I think that's, I don't know, just a gift. I don't know why people do that. All right, Palantir is another one. I know, it's extended, and I should have count the weeks on AppLovin 13 weeks on that move, and this is 18 weeks from the breakout from Palantir. And normally, traditionally, you would think 18 weeks is a long time. It's time to form another base, but we're not in that type of market where traditional strategies, can apply. So this could go up for, not in perpetuity, but it could go up for a year. I mean, why not? I mean, we saw stocks like Abercrombie and Fitch go up for a year straight. Or ELF is another stock that just went up for a year straight. So stocks can do this, and Palantir might be one of those stocks. Like I said, it's been 18 weeks so far. So Palantir looks good to me. I don't see any sell signs. I know it's extended and it's probably going to pull back to the 5, but that doesn't mean it's going to crash and burn. That's what I mean by no sell signs. Of course, they're going to pull back. But I mean, if you're holding a stock, you got to expect it to pull back at some point. It's not going to go up every day or every week. But a nice week for Palantir and AppLovin. This one was up 13.8%. So those two went up a lot. Datadog is another one I had on our ready list, and this thing popped more than 10% last week. There you can see it breaking out of this base here. And so it's a little extended now, but still a nice move for the dog. Snowflake as well, 5% move for the Snowflake. Just a lot of these software names had fantastic week. I'm not going to go through all of them. Twilio's just been on a heater. It's up, it was up 8.5% last week. You can see this one here just breaking out from its base in October on Halloween, and then been ramping higher. So that one's fantastic. Shopify. Another one doing quite well. It was up 2.5% last week, breaking out of that base. So, earnings line heading north, RS line heading north, stock heading north. So we like stocks that are going higher. And anyway, I'm going to stop there because I could do a lot of software names, but for the sake of time, I'm going to go switch gears to the medical group. Intuitive Surgical, just grinding higher stock. Nobody talks about. Broke out of a base here, pulled back to its 50, pull back to its 50, pull back to its 50. And now it's just surfing its 5, and just a leading stock, trading higher. I don't know what to tell you here. This one broke out and has been running longer than Palantir and AppLovin. So yeah, these things can go longer than, the traditional, 16 to 18 weeks. All right, Viva. Excuse, I'm gonna put this. I know it's a software, but it's in the medical space. So I'm including this in my medical stock. It just broke out of this cup with handle pattern. It was up 10% last week. Another earnings play, but yeah, nice gap higher on Friday, 8%. Just had to point out Viva, and then PRCT, not a stock that a lot it's talked about a lot, but biorobotics doing well. Broke out of this double bottom base here, allowing the moving averages to catch up here. Pulled back to the 21 last week, so that stock looks pretty good, and could be on a ready list sometime soon. All right, I'm going to switch over to the restaurant group. CAVA, I like this one at 150 here. It's just biding its time, marking time here in this little shelf pattern. So CAVA looks good. Shake Shack, they have not an investor day. They're presenting at a conference this week, I believe. Anyway, trading at new highs, broke out of this little pattern here. 134, pull back, undercut the 21, rallied back up, formed a little shelf pattern, traded higher, looks very good. Brinker, just a monster. This one's just surfing its 5, doing fantastic. Chipotle, this one looks like it could be on the ready list as well. It's got this cup with handle just starting to push away. Last week, Chipotle was up 6.3%, so getting a little extended. And then the last one is Texas Roadhouse. It's another one that I like. Pulled back 4% last week, so that's kind of what I'm looking for. Things that are pulling back. This one has a definite pattern here where it pulls back to the 21, then rises, pulls back to the 21, then rises, then it pulls back to the 21, then it rises. Now it's pulled back to the 21, kind of squatted there for a few sessions. I would expect it to trade above 200, which is providing a little bit of resistance here. But yeah, I like Texas Roadhouse. Anyway, moving on. I got to get to the retail names because there's nothing more bullish than our Walmart just going parabolic. This one broke out and it's just running with the devil here, man. This this has been more than 18 weeks as well. So like I said, the traditional, rally and base, strategy is just out the window here with this bull market. And Walmart it's like it's a Dow Jones component, man. This thing's just running 7%, 2%, 3.5%, every week it's just trading higher, getting a little extended. from its 21, but it's surfing the 5 like Kelly Slater, man. This is a beautiful stock. And then another retail name, Victoria's Secret. This is one of the largest members of the XRT. And I know that Kevin and Andy, our friends, are spending a hell of a lot of money here. You guys got to stop doing that. Uh, this one is getting way extended though, 9.3% above the 5. So congrats to the longs. That was an earnings report for Vicky's Secret, I believe, last week. So anyway, some more retail names that I like. You know, not this is Decker's Cup with Handle broke out, now pulled back to its 5 the last couple of sessions. Struggling with that 200 level. So that'll be resistance until it isn't. And then DoorDash, which is just, you know, this is a monster stock. Just had this little consolidation, the cup with handle and broke out of it. Now it's trading nicely. And then the last one in retail, I'll spare you all the retail. But this is Williams Sonoma broke out, now trading higher up, nearly 10% last week. Okay, I got to get to some of the internet stocks. Reddit, this one's a IPO monster. There's your due diligence, and now it's in its advanced phase. We don't know how much or how long it will advance, but it was up nearly 16% last week. So these growth stocks, IPO, are kicking butt. GRND, another internet name that Kevin and Andy are definitely uh, using. This one made a new high on Friday, and then I'm going to leave you guys alone. uh, all right. And then, oh, NBIS is another one of these internet content, internet content stocks that are ripping higher. They made a deal with NVDA up 18% on Friday alone. Yeah, 67% move last week. So that's what happens when you make deals with NVIDIA. All right, moving on from that group to the cryptocurrency, Bitcoin related. The CEO cannot get enough Bitcoin. Selling stock to buy Bitcoin is his strategy. Had a huge move recently. This thing's up more than 500% in 2024. Just a quiet week, starting to calm down after this massive run, which you kind of like. It was up 2% last week. You can see it's calming down here just above the 21. So I expect 400 to be resistance. Looks like it's hit a little bit of a wall on Friday, but once it blasts through there, you know, it's got to get above that 445 area, and then I think it's going to take out the 543. That's just my opinion. We'll see how it does. Coinbase, gosh, is another one that I like. Had it on the ready list, but it's getting extended now. Last week it was up 16%. Once again, this thing was not included in the S&P, and a little bit of a hissy fit tantrum after hours, but I think, you know, Coinbase is going to be fine. And Hood was another one that was rejected by the S&P, but I think it'll be fine. It was up 11% last week. So a nice move for these cryptocurrencies, which saw, you know, Bitcoin hit 100,000, and it was kind of a sell the news event. When it hit 100,000, it, you know, have a lot of sellers there. It repelled back to like 90,000 and now is back above 100,000. Last time I checked, about 101. So I expect Bitcoin to rip higher, and these stocks are going to trade with it. This is Hut up 8% last week, and then Mara, another one. It was down. They've been buying a lot of Bitcoin as well. All right, that's enough Bitcoin talk for today. Oil and gas not doing well. I mean, the demand is down and oil is way down, but these transport, Golar LNG, and liquid natural gas, you know, making new highs as it broke out of the base. And then Cheniere Energy, another one of these transport, making new highs. So these are the strong names in oil and gas. Some of the exploration and some of the refiners not doing as well with the lower price of oil. This is FTI, made a new high last week. I think it was an upgrade or something. Down 2% for the week, but trying to break out of that base there. And that's an area of interest for me there, that $30 area. All right, enough of the oil and gas. I'm going to move on to my theme. My my big theme for this year is the boomers are spending like like drunken sailors. They're taking money out of their 401ks. They're not leaving it for their children. They're out living their best life. They're booking vacations. They're taking cruises. How do I know? Well, look at Viking. This thing broke out of its IPO base, and now it's in its institutional advance phase, doing fantastic. RCL, Royal Caribbean. I mean, look at this thing. The only thing that stopped it was 3 weeks tight, and then it just blasted higher. Yeah, earnings line heading up, and the stock making new highs. And so when these cruise lines are going parabolic, somebody's spending on them. Just kind of half teasing about the boomers because everybody's out traveling and spending money, so that's a good thing. Not just the boomers, but they're not leaving anything. They're taking it with them, man. That's my friend says there's no U-Haul to heaven. So go ahead and spend it. This is American Airlines breaking out last week. Nice move, 20% move. And I even got to go to Southwest Airlines, LUV, the ticker symbol broke out of a base up nearly 6%. I don't mean to disparage Southwest, but my experience has not been good with them. But anyway, just pointing out that everybody's out there traveling, booking. So if they're booking trips, you got to have booking making new highs, right? Yeah, absolutely. This thing just is a steamroller, man. Just a parabolic move here after this breakout from that cup-shaped pattern. EXPE, Expedia, making new highs as well. I mean, this is my thesis, this is my theme, and it's really playing true. So when you're traveling, you got to stay at a hotel. You're flying all over, you're dining everywhere, and you're staying at hotels. Marriott Hotel making new highs last week. That looks fantastic. The Paris Hilton chain, Hilton Hotels making new highs, a weekly chart. Let's see what's cooking here. Yeah, up 2%. These things are just steady Eddie grinding higher. Nobody talks about them. Shh, be quiet. This is Wyndham. We have a nice Wyndham down the street here with a nice resort. Uh, Very luxurious. 4% move. So that's my theme, and I'm sticking to it. The boomers are taking distribution, spending money like drunken sailors, and we're taking advantage of it with those four areas of stocks: the cruise lines, the airlines, the booking group, and the hotel group. All right, that's it for me, except for an honor of the great Steve Jobs. I have a couple more things this week. We've seen a lot of, I just showed you a ton of names that are trading higher in software, technology, blah, blah, blah. Mag 7. And some of these energy plays have been kind of ignored for a couple of weeks, and I kind of like these setting up for this week. This one's just biding time. I don't know if it's going to be this week or next week or the week after, but at some point, this is the top performing stock in the S&P 500. Yeah, there might be some room for a profit taking. It's up over 300%, but this is wedging nicely. I got to believe this is going to trade higher into year end. The group is a top 25 group. This thing has formed a 3 weeks tight pattern here. So that would be an add-on buy point. If you didn't get it out of this consolidation at MC Stock Charts, we got it as it broke above this downtrend line this week here, and it really ramped higher, pulled back to its moving average. And now this 3 weeks tight, I believe, is an add-on buy point for Vistra, which is going to head higher. I like it above 160. So just a couple of names, we want to go to, not where the puck has been, but where it might be going. GEV, even though it was up last week, still kind of in this, shelf type pattern, if you will, right around 350. I like it. If you could break out of this little box here, yeah, above 350, that could be on my ready list as well. Power, this thing's been ignored for a couple of weeks. It just pulled back to its 21. We've seen that little bull wedge pattern work wonders here in this rally. This has been magic. The pullbacks to the 21 and the bounces. To me, that's a buy area. Sterling, the heavy construction. So heavy construction, utility, electric power. These groups, I think, are about ready to get some love. Sterling having trouble with 200. That's been acting as resistance. What do you bet it breaks above there and makes a new high? all it's done is allow the moving averages to catch up. It's just marking time. So I think it's just a question of time before that one trades higher. Carpenter, one of the top stocks in a top group. Special alloys, you can see this one just forming a shelf, allowing the moving averages to catch up after that big move from 144 to 200. So it needs a little time to rest. But another strong stock that I like. Dash, I believe I showed Dash earlier, just a stock that I like, and just pulling back here, allowing moving averages to catch up, marking time. And I think the financials might get some love this week once again. This wedging pattern here as it pulls back to the 21. That's Morgan Stanley, MS, and I think maybe even the smaller banks, like Huntington, pulling back, forming that bull wedge action, been ignored a couple of weeks. 21's catching up, so we'll see. We'll see. This rotation has been the lifeblood of this bull market, and if it's to continue, I would expect more rotation this week. I'm just guessing that it might be financials, it might be the utility electric power, it might be construction. We'll see. But anyway, I wanted to point out one more thing before I go, and that is the little history lesson here on the Nasdaq, because people are asking, how long is this going to go on? It's near a top. It's too crazy. It's gone up way too much. So I just say, just relax, take it one day at a time, um, and take a little tour of history here as we look at the Nasdaq following the 2004 election, which Bush beat Kerry, I believe. Yeah, and this had been, in a bear market for 3 years, 2000 through 2003, a 3-year bear market. So 2004 was the first year that people made money in like 4 years. So that explains why, we had this little rally into the election. Then there's a little pause here before the election. And I believe the election this year was on the, was it the third? Yeah, I believe it was the third. And so right there, it took off after, it was pretty obvious that Bush was going to beat Kerry. So, I mean, it rallied into the election, paused a little bit, and then rallied after. And you see this tax selling here as soon as January hit, because it was the first year that we had profits. So everybody sold, and you have 16 months, before you have to pay Uncle Sam. So this is a phenomenon that we haven't seen, and it was because of the bear market. But during that time, after that post-election rally in 2004, 2005, we saw a 16% move from 1905 to 2191. There you can see it there. So 16% rally. And keep that number in mind, because I'm going to take you to today's rally, which is less than 8% so far. So this is where I'm going with this. Okay, so 2012, we saw Obama was reelected, right? He beat Romney in 2012. I got to go to 320. If you will spare me here a minute. No, 320. This is why I hate doing this historical stuff. Takes a little bit of time here. 320, 2013. Okay, so now we have this election where Obama beat Romney. Big sell-off. It had had a nice run from the 09 financial crisis. Big sell-off into the election. After the election, Obama beat Romney, and it had this move. It moved that down actually after the elections, for a week or so, but then rallied strong into January and through January. So this rally lasted through the middle of March. So that's a long rally from election day to the middle of March. We saw it move from 2,800 to 3,258. It was like a 18% move for the Nasdaq following the 2012 election. I'm skipping 2009 because we were still in the financial crisis, and so after the election, it sold off until the Haynes bottom on March 9th of 2009. So, it was a different time. So I'm just using 2004, 2012 in 2016 when Trump beat Clinton, and I'm going to go right here where we saw a move from 5,034 to 5,911. This is this move here. Nice rally post-election. I could go back a little bit if that's confusing you because it did sell off post-election January. Once again, tax loss selling, right? January is a tough, the first couple weeks of January, I think are the toughest times to trade because you don't know if you're going to get that tax loss selling. So if I scoot back here a little bit, you can see that the after the election, I believe it was on November 8th when I got to go to 17. I'm in the wrong year, you dummy. I got to go to 17. All right, here we go. There we are. That looks familiar. There's your the date where Trump beat Clinton, and then we rallied strongly after the Trump victory in 2016 through 2017. If I can just fast forward a little bit, you could see the extent of the rally, and that was an 18% rally after the 2016 election. So we've got a 16, 17, 18% rally, and then I've got to go to 2021. Hopefully I can get these dates right. 121. There we go. This is when Biden had beaten Trump in 2020, and it ran through 2021. It ran a long way through 2020, all the way till I believe March. Yeah, we had a November through March rally, and this was a 30% rally before it pulled back to the 50. So this is the date where it was announced that Biden had beaten Trump, and we had a 30% rally. So the last four, excluding the 09, financial crisis, the last four elections we saw 16, 17, 18, and 30% rallies, okay? Post-election, all right? So this is normal stuff that we're seeing here. This is nothing abnormal about our current rally, which I just said is less than 8%. It's about 7.9%. We'll call it 8%. So since the election here, I mean, this looks like nothing compared to what I just showed you. This is the election here. It was the 5th of November. So it's been a month, and I just showed you, 4 times where it rallied, into February and March. And it rallied, between 16 and 30% with an average of 20.5%. So 8% rally, yeah, it seems a lot, and people are talking about how frothy it is, but this thing can go a lot further, and I think it will, at least through year end. And I'm not predicting anything, that's my expectation based on past elections, post-election performance in this century. And I believe this century is, I know historians like to go back way, way back, but things are kind of changed in the market with the advent of, the type of trading that people are doing. Everything is going so much faster these days. So maybe the rally will be faster, but I still believe that we're going to see, like I said, 8%. I would think minimum would be 15%. So I think we're halfway there. And I think the time goes through the end of the year. And that's my story. I'm sticking to it. Everybody, has an opinion or it's not a prediction. It's an expectation based on past performance. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.